Coming to you live from the world headquarters right here in Houston, Texas of Concenture Wealth Management. I hope this video finds you doing well. This time, I'm not going to say I hope you're staying cool or the heat isn't getting to you, because it seems like every time I mention something about the weather, it ends up getting hotter. I'm also not going to be doing the rain dance like what I had planned on, because the last time I did a rain dance, Hurricane Harvey decided to come and visit all of us here in Houston. So I hope everyone's doing well. And just want to give you a real quick market update. Wow. July has been absolutely a fantastic month. If you go all the way back to June 16th, when the Federal Reserve raised interest rates, the markets basically put in a temporary bottom and started moving up. And in this month of July, we've had three really big things happen. Number one, we had the Fed go and raise interest rates. That was the second raise of interest rates of 0.75%. Think about that. In the last 2 months, the Federal Reserve has gone through and raised interest rates 150 basis points, or 1.5%. That's significant. They're trying to show that they're serious about inflation. And in fact, in Chair Powell's comments, he says that they're probably going to continue to raise interest rates. Luckily, we have about an 8-week period, so they're going to get a lot more information in before they're ready to go and have a meeting to talk about raising interest rates. We actually feel that September and October, they will probably raise interest rates 0.5% and then 1/4, but I'll bet who knows what's going to end up happening. We just recently had, the other thing we had is we had a lot of economic numbers. GDP numbers came out. I'm going to go with the classic definition of what a recession is. It's back-to-back quarters of negative growth. We just now have had back-to-back quarters of negative growth. Now, there's one thing that's kind of interesting about where we are, and this may mean that this recession might be very, very shallow and relatively short-lived, is that the other economic numbers, employment, those types of things are all really, really good. The risk is that the Fed moves too much and it sends us a little bit deeper. But we had GDP come out. It showed that the economy in the US actually contracted. We just need to be aware of that and make sure that we're playing defense, which is what we're doing inside of the portfolio. Now, something that's very important to keep in mind. July has been really good. The reason why is earnings. Earnings have been in focus. For the most part, companies' earnings have been really good. Your good companies are still making money. What we're starting to see is that growth rate is starting to shrink a little bit. So that may mean that we may have a little bit of more volatility, and it also may mean that the individual security selection is going to become increasingly important. Owning a broad index may not be exactly where you want to have 100% of your portfolio. Individual security selection in markets like these are going to continue to be vitally important. So what do we think is going to happen as we're here in August and kind of moving forward? Well, August historically is a very low volume month. Everyone who works on the New York Stock Exchange goes on vacation in August. So look for volatility to be relatively low. You're not going to have look for volatility to be a little bit high because there's not as much volume that's in there. So someone taking a position on one side can move the market. But I think that what's going to happen is that in the month of August and as we move into September, all eyes are going to be focused on economic numbers and headlines and things that the Federal Reserve says. Just be aware of that. We're prepared here at Concenture to make sure that we're monitoring those portfolios, making adjustments. What do I think is going to happen between now and the end of the year? Well, I think we're going to go through this last little bit of doldrums right here where it is. And then as we get closer to the election, I think you're going to start to see the market start to edge up. I still am cautiously optimistic that the end of the year, we're going to end up slightly up to slightly down. We're going to make back a lot of what we've gone through, and then we'll start to evaluate what's going to happen next year. There's always a risk in making a call of what's going to happen over a 6-month period, but I still feel that companies' earnings, employment, these types of things are still very, very strong for the economy. In fact, we just recently had consumer sentiment numbers come out, and through the month of July, these are the June numbers, have actually shown that the consumer has gotten a little bit more positive, and it shows expansion. So with that, please know that if you have any questions or anything that you're uncertain of or just want to visit about your portfolio, give us a call. We're monitoring things. We're making adjustments as we go through. I hope everyone has a great rest of the summer as the kids get back in school and it's time for football season to get started and we get maybe a little bit of reprieve. I guess that'll be in November when we get a reprieve from some of this heat. Hope everyone's doing great. Let us know if you need anything. We'll talk to you real soon. Have a great week.